Hi everybody, Dion Lyle with Treasury 25 doing B2B Payments 3, Corporate View of B2b. Let me take off my mask, which I always wear in public now, put on my glasses. So, on this week's Fintech 5, what we're going to look at is the corporate view of B2B. And this is something I've been exposed to, as I mentioned in my last series. I had been a controller for a small company. Now, corporates need banks and vice versa. They have a very symbiotic relationship, but there's also a lot of tension. And so that tension is what I want to talk about from the corporate view, and my next in the Fintech 5 series will be about the bank view. But let's look at this. I found this definition that I think is really powerful. It's the website of Corporate Finance Institute, cfi.org. Finance. Their job is to create value by managing capital in a way that earns higher than expected risk-adjusted returns. Accounting. Accounting is the recording, maintaining, and reporting of a company's financial records. Best definition I've ever heard between the strategy of finance and the task or tactical aspect of accounting. So Treasury is a subset of the finance group, and I found this org chart here, and I think it does a very good job, and you'll see it if you look at my Medium paper. The CFO reports CEO, treasurer, controller, tax manager, right? Now this is a larger company, obviously. Accounting, FP&A manager, AR, accounts receivable, AP manager, right? AP clerk, and then a payroll clerk. And this is a very rough diagram. And so as organizations focus on financial returns, how to optimize the role of finance to move from the scorekeeper, like accounting, to a true C-suite value add for the CEO. Angela Strange and the team at A16Z Fintech did this pyramid that I've used before. And it's really good because at the top, the most valuable is the strategic finance or treasury, where they get more into the working capital. And then from there down, notice the bottom, transacting, just payments, checks, paying the bills, record keeping, reporting, compliance, and up to financial planning. And so like all functions in today's data-driven world, CFOs and treasurers need to move up that value stack, right? Insights rather than simply data. And if you watched my last Fintech 5, I talked about a company called Runway that A16Z just invested in that is trying to address this very issue. So I love that. So corporate treasury, I've worked in and out around corporate treasury for a while. And so treasury for a corporation can be divided into 6 primary functions. This is my own view from other things I've read. Funding, corporate finance, treasury ops and controls, supply chain financing, underutilized, absolutely powerful tool, financial risk and strategy, cash and liquidity management. I remember a story from a friend who worked at Dell Computer in the early days. They had a real cash issue, even when they were growing dramatically, because they had to pay for parts, get the parts. It's what is supply chain financing today. This was many years ago, but they literally had to look at their cash daily to make sure they didn't run out of cash. At a time, they were very successful in growing rapidly, right? So again, maximize working capital as you see here. Now, the details of this don't matter. It's just a very simple diagram. Simple. It's a very complex diagram, honestly, about all the tasks that come into a treasury operation. This is from Google Treasury years ago, nothing confidential. It's just how they operate with the SAP system in the middle, cash management, and all of these. Now imagine there was a mistake somewhere in this diagram. How would that drive through the whole thing and really mess up the general ledger or the APAR or the view of finance or cash flow. So anyways, treasury is very complex. So a lot of people say, well, hasn't this been automated before? ERP, Enterprise Resource Planning, or some of these Oracle Financial Cloud, SAP S4HANA in the cloud, hasn't that fixed it? You would think, based on the things that these people say they're doing, that there would be no other problems to solve. But it's still a big issue, right? So the enterprise software market for finance was valued at $12 billion in 2019 and is growing. A compound annual growth rate, 8.5%. Why isn't it solved, right? It isn't. There's just so much complexity. No one system can solve it all. Now, I use a lot of Celent and Ete Group for looking at treasury and corporate bank markets. Excellent. Both firms are fantastic. Now, the following is from Ete Group's top 10 trends in wholesale banking and payments. By the way, it's called transaction banking, wholesale banking, B2B banking. So it gets confusing. And so what they see is automation. Usability trumps functionality. Real-time payments shift from if to when. We're going to talk about that in a later FinTech 5. Payment automation, great focus. Get rid of the paper, not get rid of the people, but allow them to be more value add, more concierge-like. Open banking gets monetized, artificial intelligence, cloud adoption continues, and digitalization, hard word to say, but that means get rid of the paper, internal and external. How do you get your partners, the people you pay, the people who pay you, how do you get them to stop using so much paper, right? Now, Celent in 2018 saw the following shifts for commercial payments, right? Digital omnichannel, innovation in fintech, legacy and ecosystem transformation. Great summary there from Celent. Now, why is this important? Well, 2019 Treasury Perspectives, they do this every year, Treasury Perspectives, hosted or sponsored by TD Bank Strategic Treasurers. Treasury operations, manual processes continue to bog down corporates. Payment forecasting time consuming. A third of all Treasury groups surveyed couldn't complete their duties. That's amazing. That's actually quite sad. So corporates are slowly applying new tech, but it's too slow. I love this quote from Kelly Wong. Data science moves us from the accounting role of reporting the past to the finance role of guiding the future. If you go back to my earlier definition, that's exactly what they need to do. I realize these graphics are small. It's the only version I can get. But look at how many people are unhappy with how they're doing their jobs. They're not able to do their jobs, right? And the other piece of this that's really important, payment management, we're all payment geeks, I assume, on here. That is an opportunity. They're not happy with what they have, right? The same report, 43% of the respondents of the survey already using SaaS fintech solutions. Only 17% are using APIs. APIs, if they're done right, can get rid of a lot of that manual entry, right? Now, given the hype of DLT blockchain, Treasury professionals are aware of it and they think about it. This great quote from this survey, I'll net it out for you. Treasurers are excited about technology, but not proactive. How do we get them over that? Well, the consultancy Bearing Point, who I don't use a lot, but it seems pretty good. They have a payment factory that they kind of talk about and about how the issues that they try to address, but it's basically complexity and costs are the drivers of this market. Now, like all winning strategies for banks, if you're a banker, look at the customer problem first, right? This is how corporates look at it. And I've been to the AFP, Association of Finance Professional events in the past, and even spoken at them years ago. There's this tension between the bank's offering and what the treasurers want, and they kind of cherry pick the services, and they pick the low margin, high volume ones, and the banks get frustrated back and forth. But I'm encouraging bankers, just look at it from your customers, treasurers, CFOs, APAR clerks. Look at it from their perspective. Try to figure out how to add value, right? Thank you for joining. Look forward to hearing comments. Hope you enjoyed this.